Hey guys, Brian Stevens here with the National Real Estate Post. I have Paul Orlando. No relationship to Tony. You have to be at least 50 to understand that joke. He's the Executive Vice President and the Chief Strategy Officer over at Lender Price. A lot of stuff going on right now with Lender Price. A lot of stuff going on right now with rates, which makes your product very, very interesting to loan officers, realtors, and consumers alike.
It definitely does. It's designed to help them pick and choose the right rates from the right lenders and, really maximize their return.
So that's an interesting way of putting it. What is the right rate?
The right rate is the one that works out best for the customer. So looking at all the products, determining, what is the right product for a customer. And that's what's nice about our application. It doesn't just return one product for the inputs that you put in. It returns all of the eligible products as well as the rates and points that are associated with it. That way the loan officer can work with the customer and say, let's see what you want to maximize. Do you want to maximize, the lower payment? You want to look at what's, the interest rate only, and they can work with them to figure out which is the best product for them and what is the best rate associated with that.
It's really interesting because if I have one pet peeve about the mortgage market right now is loan officers are stuck in this 2020 and pre-2020 mindset where they're offering meat and potato loans. You want a 30-year fixed conforming agency deal or do you want an FHA deal? Which one of the two do you want? I think it's really important now because we've got more products today than we had back prior to 2020. So utilizing a platform like yours is going to help out. What are some of the other options on the table besides your 30-year fixed rate, as I refer to as a meat and potatoes loan?
Well, you definitely have some of the non-QM products out there, and it makes it easy on our platform for people to find them because, especially for lenders, they can use our mini pricer and they can customize that to however they want. We have a mini pricer that they can put up on their website, and we have a flex pricer that they can use for their internal customer or internal loan officers. And that allows them to say, I want to focus on investment properties. They could create a flex pricer that's designed specifically for investment properties, and it has the inputs set up on it. So that way they make sure that they will get the investment properties back. Or for non-QM, if there are specific features about a non-QM product, they can create a flex pricer that is designed just for non-QM. And so when their loan officers come in, they see all the different pricing options and they click on which one they want, or they can just go and say, pull back all products.
So you said you have your mini pricing, you could put that on a website.
Yes.
So that would be consumer facing then?
Yes. So the mini pricer, again, it doesn't give them every option available. It's meant to give them a quick idea of what kind of loans and prices are out there.
That's really cool. That's really, really cool. Now, there's a number of different platforms that offer a parallel type of services. What distinguishes you guys over there at Lender Price from your peers in the industry?
I think the way we look at it is that, we've been in the business for about 8 years now, which still means that we're young in the industry. Okay. But the other thing is that we're proven in the industry as well. We've got a lot of clients out there and several large clients as well that are using our application, and it's working for them day in and day out. Our system was built from the beginning using APIs and microservices. So it means that it's very flexible for the lenders that we're working with. They can ask for changes and we can make changes to small components of the system and deploy those quickly, where with a monolithic application, you're going through an entire build cycle. You got to wait till everybody is in agreement that this is something they want. With our application, we can put it in a microservice and add it in. Or if we're working with a lender and they have specific APIs that they want. They don't want to use our UI, but they want to be able to access additional features. We can create that API for them. They can integrate it into their front-end system, and they can be pulling the data back and forth without any issues. So we really like the fact that it's flexible. We are cloud-based, and we're in multi-regions and multi-tenants. So that way we can ensure that if our cloud provider has an issue in one region, it's up and running on the other region instantaneously. Yeah, again, we're there to make sure that our clients don't experience any downtime and also have the best feature set out there available to them.
You know, it kind of reminds me of the point of sale in the LOS, the loan operating system space right now. You have an analog mindset that's occupying a huge part of a digital space.
Yes.
and we're starting to see the cloud-based loan operating systems and point of sales really kind of take over from some of the systems that have been grandfathered in over the past 20 years that were very expensive, very big files, super cumbersome, over-engineered to death, and they're getting faster and they're more nimble and they can pivot quicker. It sounds to me that's kind of what you're doing to this space, is you guys are cloud-based and your loan officer can actually participate with the process with your program and customize whatever the search results are on the fly to make sure that they're getting the very specific surgical best product that they're looking for their client. Does that sound about right?
Yep, that's definitely what we're trying to do. And we're also trying to build that flexibility with the loan origination systems as well, and the sale products, so that we give them options. We can embed our Flex Pricer right inside their application, or we can take our entire product and iframe it into their loan origination system. So the loan officer or secondary marketing lock desk is still working in the same application that they're used to day in. But yet they have this superior product and pricing engine available to them right in their application. And if they don't want to do that, we also have the ability for them to utilize our APIs. Again, keeping them in the loan origination system that they're accustomed to, but taking advantage of all of the features and functionalities that we have within our product and pricing engine.
So you have there's two components that we're really talking to. We're talking about the mortgage company who's providing a rate for maybe wholesalers, who's providing a rate for loan officer consumption. That's certainly going to be a component. But then the other component is the loan officer who can go to your site and price everything out. So the cost to a loan officer, what's the cost? Well, I have two questions actually. What's the cost to the loan officer to participate with this? And then as far as the integration goes with the rate providing mortgage company out there, who's dealing with all that integration? So I have my systems that are in place right now. Are my programmers coming to you to figure out what that integration looks like, or is your programming team coming to us, or how does that work out?
So it works out both ways. Let's start with the question of the loan officers. So what we created is what we call the marketplace. And on the marketplace, we have over 60 large lenders on that platform. And what that does is, if you're a broker or a loan officer and you're used to getting rate sheets from all these different entities, and then you lay them out, you try and figure out which one of these is the right one to use. You don't have to do that anymore. You go to the marketplace and you put in your criteria, you put in which lenders you're looking to search from, and you hit go, and it comes back and it lays out for you, here are the products and rates by lender for what you're looking for. So it makes it much easier on them to search for it. And the best part about it is we don't charge brokers and loan officers anything for this service.
You guys hear that?
It's free for them. They come out there, they can search the rates. For the lenders, if brokers are searching their rates, we notify them to say, hey, here's a potential opportunity for you to reach out to somebody if they're not already a client of yours. So it's a win-win on both sides. The brokers get access to the rates and the lenders get access to a wide range of loan officers and brokers. We have, I think, over 10,000 brokers using our system today for searching for rates.
That is fantastic. I want to get your widget. I want to put it on my site. Can I do it?
Yep.
Yes. I'm going to call Dwar right after this. Dwar better call me back. Better call me back, I tell you.
Yep.
How long does the integration take if you're working with a mortgage company?
A new lender bringing them on typically takes about 90 days because we're going to do all the work to put their product and prices into our system. And then on a daily basis, all they have to do is send us their rate sheet and we'll adjust that. Once we've built the template for them, we're able to adjust their rates every day just by adjusting, that rate sheet. The other cool thing about setting up rules in our system is that we use natural language processing. So everybody's talking about AI today and, is it good? Is it bad? How do you use it to your advantage? And one of the things that we're using is natural language processing, which gives us the ability to have somebody just speak in English what they want. And the system behind the scenes will take and pick out the key words. So if you wanted to create a rule where if the loan amount is greater than $300,000 and less than $350,000, add an additional 25 basis points to the price. All you have to do is say that, and it'll go through and it'll pick out, 350,000, 300,000, 25 basis points, and it'll convert that to a system-generated rule behind the scenes.
You're not concerned that your system's going to build itself a gun and shoot you? AI you're using?
No.
You're not with Team Elon. You're not with Team Elon on AI then, huh?
No. Again, natural language processing is just a part of the process. AI is, building in intelligence where it's learning and building, as long as you do that in a controlled manner, you don't have to worry about it turning around and blowing up your system on you.
I've seen the Terminator. Now, I actually just kind of a curiosity point. How many times have you personally known of loan officers coming to you or clients coming to you saying, thank God I had this pricing engine because I wouldn't have known that this product existed or this pricing existed, and it kind of really changed the trajectory of where they're sending loans to. I mean, can you imagine that if you're a lender, you're a broker in particular, and you have your 2 or 3 that you're going to all the time because their systems are great, because their pricing is great, because they can buy NBA teams, that type of thing.
Yeah.
But I just, again, and it's all wonderful and well-deserved, but what if you're missing opportunities with other lenders out there who might have better pricing for your clients, or might have systems and turn times that run as quickly, if not faster, or products that are not currently available to you? Having more products available to you is just going to be more opportunities for you. If you have more arrows in the quiver, you're going to hit the target more often. Just think of it that way. And these guys are providing arrows in that quiver for you.
Definitely. And that's one of the benefits that you have is that you're not stuck in that box of, 30-year, 15-year conventional fixed mortgage. This gives you the opportunity. In today's marketplace, you need every borrower possible to keep your pipeline moving. And in today's marketplace, borrowers are different in many different ways. So you have to be looking for, the low income products. How can I help them? The low down payment products. What are the different ways that I can help the borrowers get into a house with these higher interest rates? Entities that are giving buy downs. How many lenders are out there giving buy downs today? Again, just to get people in at a lower interest rate, as the market, continues to remain high. Now, the hope and goal is that, the interest rate raising has stopped. The last words from the Fed are that, they seem, all of these rate hikes seem to be taking effect. And, right now they're going to sit back and they're going to watch inflation and see what it does and see what happens, to the overall market. But the last information that I was reading said that, we think we've hit the top, and hopefully by the end of the year, beginning of next year, we'll start seeing rates tick down. They're not going to tick down into the 2 and 3%, but even as they tick down, closer to 5%, that's going to make a big change in what's available in the marketplace.
Now, how can somebody, if you're a loan officer, how do we get to your site? And if we're a company who wants to participate in your pricing engine, how would they reach out to you?
You can reach out to us at lenderprice.com and connect directly to us. And there's a contact me form there, and we'll connect with you. And brokers can actually go to the marketplace to sign up themselves. The only thing you need is an NMLS number, and that gets you into the system.
And listen, guys, take the Pepsi challenge. Dating myself. Take the Pepsi challenge on this thing. If you have an existing price engine that you're currently using, run them side by side and see which one is more user-friendly for you. Run them side by side and check the results that you're getting. Run them side by side and see the results. Just check it out. Give yourself an opportunity to improve yourself or your processes wherever you can. And this is an opportunity that's going to cost you nothing but a couple of minutes of your time. It's silly not to do it.
Yep. That's one of the things that we've heard from lenders is that people on the marketplace are getting significantly more leads to them than our competitors' product because it's free to the brokers, which, again, when people are trying to save money, they're going to look to see what can I get for free. And it's not something that's free and doesn't work well. It's a free tool that provides you access to a myriad of rates and products that you may not have had in your, as you said, quiver before, thus providing them more opportunities to serve their clients.
Well, right on, Paul. Hey, listen, all the information to contact these guys is somewhere right around this video that you're watching right now. It could be on social media, it could be on YouTube, it could be in your inbox, but make sure you reach out to these guys. They listen, we've worked with them for a while. These guys provide a great product. That's why we're having this conversation today. We want to provide value to loan officers and the mortgage companies that we work with so regularly. So reach out to them, give it a shot, and let us know what you guys think about it. Reach back out to us. We'll let them know. Thank you guys so much for your time today. You have a great rest of your week. And
great talking with you as well. Have a great week.
All right, we'll see you soon. Thanks, guys.